Welcome back, students who are taking financial accounting, and in this series of videos we are working on the assigned homework problems from the digital study guide for Chapter 12, the Group B exercises. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. Okay, we are working on problem 29, 29B. Financial statement analysis. All right, evaluate the common stock of Sharp Systems Inc. as an investment. Utilize the 4 ratios that help determine if the business is generating enough net income to reward the stockholders for the use of their money. Okay, that is one. If you look at the key questions, it is one of the key questions. So you find that key question and then you look at the ratios that are associated with that key question. Is this information to determine whether stock increased or decreased in attractiveness during the past year? Round all ratios to 2 decimal places. All right, so just as a quick aside, and this again is theory, all right, so go back and watch the theory videos, not only for this chapter, watch the theory videos for this chapter, but really spread throughout the chapter itself. Basically, you end up with 1, raw data, meaning the information on your balance sheet or your income statement. And then 2, you create your comparables, your comparables for your balance sheet and your income statement, which is done in either a vertical or horizontal analysis. And then from that, okay, so like here, you have your raw data here, and even though we haven't created amounts and percentages, we do have 3 years of data. And then you go and you look at your 5 key questions, which we're looking at this one here. And in those 5 key questions, you have your ratios. So you do all of the calculations for those ratios in order to come up with numbers, okay, and percentages. Okay, now they don't mean anything in and of themselves unless you're comparing one year to the next, but that's being able to understand the ratio itself, okay, when you're comparing one year to another year or an amount to a percentage of the same ratio. You need to have an understanding of the underlying concepts of that particular ratio in order to understand whether that's good or bad. And if you don't have that understanding, the way you develop that understanding is by looking at a homework problem, say, and you know what the solution is, so you know what's in the numerator and you know what is in the numerator, the numbers in the numerator, and the numbers in the denominator. And let's just, as an example, say there's 3 in the numerator and 3 in the denominator. But let's say to get that 3 in the denominator, you needed an average. So let's say you had 2 plus 4, and that was divided by 2, which gives you that 3, right? Well, you have to look at each and every variable, this 3, this 2, this 4, right? And what you do is you say to yourself, okay, here I understand the math behind this formula, and I understand where to get the numbers from, but what does that all mean? In order to understand the effect, start playing with the numbers. And I mentioned in the last video how I like to bracket things, meaning if I'm looking at this one particular variable, what I'll do is, obviously 3 over 3 is equal to 1, okay? All right. And what I'll do is I'll say, okay, I'll go above, I pick a number above that number, so I'll use maybe 4, and I'll pick a number below it, and I'll use 2, right? And I'll rework the entire formula to see what the net effect is. Okay, obviously if I used 4, then my answer would be closer to, let's see, 1.3 something, 33, right? If I use 2, my answer would be 3 divided by into 2 gives me 0.6 something, 66 something, okay? So by changing that particular amount, whatever that is in that ratio, you can see the net effect and the change as to whether, well, let's say this was an increase in assets. You know, if I increased my assets and I had 4 instead of 3, I'd see that my ratio would have went up, you know, would have increased versus decreased. If I had a lower amount in my assets, then I would have seen that particular ratio would have decreased. And I do the same thing over here with each and every individual variable. Where I have 2, I might use, say, 4, and I might use 1. Where I have the 4, I might use, say, 6, and I might use 2, right? And just bracket that number and run the numbers, okay, in order to be able to understand what that ratio is telling you. Now, once you have that understanding of the ratio, remember, we're trying to answer the 5 key questions, all right? We're trying to answer those key questions. So once you have an understanding of the ratios, then number 5 is being able to think through, you know, you don't look at just one ratio, okay? In this case here, you're being asked to look at 4 ratios, okay? And if you understand the effects, if you understand all 4 ratios, then what you're doing is you're saying, okay, you know, how does all 4 of those ratios, 1, 2, 3, 4, how do all 4 together make up the whole in answering those particular key questions? Because it's like in the last exercise, all of the ratios increased, all right? And so, yeah, it was simple to say, oh, because the numbers went up, it improved, the situation improved. But you're not going to always have that as the case. Sometimes you're going to have where this one will increase, this one will decrease, this one will decrease, this one here will increase. And how are you supposed to answer the key question? Well, you have to look at the relationship between all of the ratios together in order to be able to answer those particular key questions. So I know I've spent 7 minutes talking about this, but it is important, and those who don't watch this video are going to miss it. So be happy, that you have some understanding of what you're trying to accomplish in this particular chapter, because it's about analyzing the information. You don't crunch numbers. You don't create balance sheets and income statements. You don't create financial statements just to create them. You create them to use them, right? And what do you use them for? Well, how do you use them? Okay. And answering the key question, creating the ratios, answering the key questions, and then thinking about the data that you have to be able to answer the questions in doing the analysis is what this is all about, okay? And it doesn't matter whether you're an accountant or a business manager and you're in marketing, okay? You're in the business world, you're going to get copies of the financial statements, and if you're in sales, okay, if you're in the marketing department, you need to be able to answer the key question that pertains to you, and looking at those ratios. All right, the accountant will do the work, yeah, and produce the numbers, but you need to be able to think through everything and understand, the effect upon you. And the same with the business manager. Because at the end of the day, it's not the accountant who's going to have to answer to the boss as to why sales are down or why you didn't produce enough product, okay? And excuses such as, oh, well, there was a glitch in the, we didn't get any supplies, or, it was an experiment in trying a new advertising scheme. Those aren't going to cut it when the company is not profitable. So you need to be able to calculate the ratios yourself. If you're given those ratios, you need to be able to understand how they fit together to be able to answer key questions as far as the performance of the company. Right, so with that said, and that's 10 minutes, let's get into this. All right, so what are the 4 ratios that help determine the business in generating enough net income? If we look at our key questions, you'll see that those 4 are earnings per share, dividends per share, dividend payout, and return on equity. Return on equity. You can, those are in the chapter in the textbook, or you can go back and watch the theory videos where I show the PowerPoint slides with those key questions on them and the related ratios that for each particular question. So now that we know what the 4 ratios are, we have to look at each and every one. And again, you can look at the formulas in the book. Earnings per share is the net income over the average number of shares outstanding. Okay, so I'll work the problem down here. Okay, let's see here. Right, so we have 2012 to 2013 to 2014. And it says whether the stock increased or decreased in attractiveness during the past year. So I need 2014 numbers and I need 2013 numbers. So I'm going to have earnings per share here, dividends per share, dividend payout, and return on equity. And as I work through, I'll do the work over here on the side, and when I'm going to pause the video and erase between each calculation. So for the earnings per share, I'm going to need to do 2 calculations, and this is kind of like the last exercise where all it is just a lot of crunching numbers, but the important thing is to know where you're getting the numbers from. And so for 2014, my net income is 110,000, and my average number of shares outstanding, the number of shares outstanding at the end of the year was 100,000. The ending of the previous year becomes the beginning. The ending of the previous year becomes the beginning of the current year. So for 2014, I have 100,000 as my ending balance plus 105, which is my the 100,000 is the ending of 2013, which becomes the beginning of 2014. So 100,000 is my beginning, and 105,000 is the ending of 2014, which becomes the beginning of 2015. And since it's an average, it's divided by 2. So that's 205 over 2, which is 102,500. So I have 110,000 over 102,500, and that ends up dividing 110 by 102,500 gives me 1.07 for 2014. Okay, pause the video to write that down because I'm going to erase. And we're pretty much doing the exact same thing for 2013, except we're looking at 2012. 2012 ending becomes the beginning for 2013. So I have 120,000 for net income, and I have 97,000 as the beginning plus 100,000 for the ending over 2, right? So that's 197 over 2, which is, let's see here, 98.5. So I have 120,000 over 98.5, and that divide one by the other, and I get 1.22. All right, so pause the video because I'm going to erase it. So that was earnings per share. All right, dividends per share. dividends per share is equal to my dividends over my average number of shares outstanding. Okay, so all we're really doing here is the difference between the earnings per share and the dividends per share is the number in the dividend. Okay, so if you've copied all of that down, right, from doing the earnings per share, I'm going to save some time and go, okay, my dividends for 2014 are 45,000, and I had 102,500 as my denominator, because remember, it's the same average number of shares outstanding, and that gives me 0.44 as my dividends per share. All right, so pause the video. I'm erasing that. Okay, so for 2013, I have 51,000, and 98.5 was the average number of shares outstanding for 2013. So divide one by the other, I get 0.52. Okay, pause the video because I'm going to erase it. All right, dividend payout. Dividend payout is equal to my dividends over my net income. And so my dividends are for 2014 is 45,000, and I'm dividing that by my net income of 110,000, and that gives me a percentage of 40.91%. And then for 2013, I'm doing the same thing, 51,000 over 120,000, and that gives me 42.5%. Okay, pause the video because I'm going to erase that. Okay, and lastly is my return on equity. And my return on equity is my net income over my average stockholders' equity. All right, so my net income for 2014 is 110,000, and my average stockholders' equity is beginning at 603, plus the ending is 640 all over 2, because it's an average, we're dividing. So I end up with 1,243,000 divided by 2, which gives me 621,500. So I have 110,000, and I'm dividing by 621,500, and that gives me 17.7%. Okay, pause the video because I'm going to erase this. And then lastly here I have 120,000, and I'm dividing it by, the beginning is 580,000 plus the ending of 603 all over 2. So that gives me 1,183,000 divided by 2, which gives me 591,500. Right, so 120,000 divided by 591,500 gives me 20.29%. Okay, pause the video because I'm going to erase all of this. All right, so now we have our, we've performed the ratios based upon the set of steps that I had presented at the beginning of the video here. And now that we have the raw data, right, I'm going to try to answer the question, determine if the business is generating enough net income to reward the stockholders for the use of their money. That's the key question. Now, you can look at each and every, you should understand what each ratio, the concept behind each ratio, all right? And in this case here, you have a, from 2013 to 2014, earnings per share went down, and you should be able to understand the relationships between the various data as to what that means as far as earnings per share is concerned. My dividends per share, it also decreased, and the same, you should understand that relationship. My dividend payout, that decreased, and my return on equity decreased. So, unfortunately, like in the last video for the last exercise 12-29, everything was an increase. So it was relatively easy to just say, okay, I had an increase in all of these, so it was an increase, right? Now in this case here, we're looking at everything decreasing. Right? So determine if the business is generating enough net income to reward the stockholders for the use of their money. So are they generating enough net income, right? Well, just because you look at one year to the next and see the effect of the net income, right? Yeah, here the data shows that the net income went, dropped down and dropped down from 2012 to 2013 to 2014, but that's not what you're measuring, okay? You're measuring whether the amount of net income, you're generating enough net income in order to be able to reward the stockholder. So hypothetically here, we're seeing negative. So this is a decrease. So they're not, right? Because everything is a negative. So the answer to the question is a decrease. It is not rewarding. It's not generating enough income to reward the shareholders. But what if, say here in 2013, instead of having a decrease of 120,000, let's say this went up to 165,000. Okay, right? What you have is an increase, and then you have a decrease in your net income. Well, what would you have to look at those individual ratios and understand the effects in order to be able to answer that question. And my suggestion is go ahead and play with that number. Give it an increase and see what happens, and see what you can determine as to what whether that's a good thing or bad thing for the company if they've generated enough net income in order to be able to reward the stockholders, right? So that's kind of like the idea behind the analysis. You can't just take numbers at face value, even though the last exercise and this exercise you could, but realize that you're just learning these concepts and learning how to analyze. But the bottom line being is that as you have data here, okay, and you might have let's say you had an additional 2011, and here you had say 100,000. Okay, you have an increase here, right? A decrease here and a decrease here, right? Or let's say they had 2015 here, and let's say now we had 155,000. Okay, and that would be an increase, right? You can't just look at the net income and make a determination. You have to look at the ratios and tell you what the ratios are. Look at the ratios and see what the ratios are telling you about the performance of the company, and that's what analysis is. Looking at the performance of the company. All right, so with that said, I'm going to go on to the next exercise in the next video, and it'll be the last exercise for this chapter, and then we'll move into the problems. But as always, if you don't understand something, go back and watch the theory videos, and if you're still not understanding it, feel free to telephone and speak with an instructor.